And hello and welcome to another episode of Startup Caps, your eye on startup capital movements in Africa. In today's episode, we dive into the agri-tech sector, a crucial area for innovation and growth. Now, in 2023 alone, agri-tech startups in Africa attracted significant investment, with Trigger Foods raising $50 million to streamline Kenya's agricultural supply chain, and Farm Crowdy securing $15 million to expand its digital agriculture platform in Nigeria. Now, this underscores the increasing focus on sustainable agriculture and, of course, food security. Let's start off by examining how agri-tech is transforming agriculture across the continent.
The global agri-tech market is experiencing significant growth, projected to exceed $75 billion by 2032, with an annual growth rate of 13.1%. This surge is fueled by increasing demands for sustainable farming solutions and technological advancements in developed regions like North America, Europe, and Asia Pacific. Innovations in biotechnology, precision farming, and digital agriculture are key drivers of this expansion. In Africa, the agri-tech sector is emerging as a game changer. Though it currently represents less than 1% of the global market, it's poised for rapid expansion, expected to grow from $280 billion in 2023 to $1 trillion by 2030. The continent's focus is on enhancing food security and transforming agricultural practices through technology. Agri-tech investments are increasingly robust, with approximately 354 deals recorded since 2021. The year 2022 alone saw $300 million in funding, reflecting a growing confidence in agtech's return on investment. Investors are particularly interested in startups that offer innovative solutions for crop monitoring, farm management software, and agricultural fintech services. Geographically, Kenya, Nigeria, and Egypt are leading the agri-tech investment wave in Africa. Kenya recently overtook Nigeria as the most active country for agri-tech funding, accumulating over $280 million across various funding rounds. This indicates a strong entrepreneurial ecosystem and a supportive government policy environment in these regions. Despite vibrant venture capital engagement, the agri-tech sector in Africa faces challenges in M&A activity. The scarcity of significant exits is notable, which may affect long-term investment sustainability. Strengthening the exit strategy could enhance the sector's attractiveness and provide clear success benchmarks for new investments. Looking ahead, the agri-tech sector is set to be revolutionized by advancements in remote sensing, AI, blockchain, and mobile platforms. These technologies promise to enhance agricultural productivity, improve supply chain efficiency, and ensure transparency in trade practices. Embracing these innovations could significantly impact global food systems, making agriculture more resilient, sustainable, and productive.
And now that we've plowed through the agri-tech investment landscape, let's seed some conversations with key decision makers cultivating the agri-tech investment landscape. I'll begin my discussions with partner for the Africa Seed Fund at Flat 6 Labs, Christine Namara, and founding partner at Lofty & Capital, Idris Bello. So, Christine, when I think agri-tech, I obviously think agriculture. And when I think agriculture, I can't help but think about infrastructure. How is that looking from a market potential? Do you see this as a hindrance to attracting more capital towards the sector?
Well, I think that the thing about agriculture is it's not a standalone. It doesn't exist in and of itself, in a sense, from a market perspective. When you think agriculture, you have to think logistics. You have to think access to water. You have to think access to capital. You have to think many other things that surround the whole ecosystem for it to be efficient. And so looking at it as a single kind of marketplace kind of skews what you actually need to do to make it a successful play on the continent. So it doesn't hinder access to capital. It actually just makes the definition quite broad in terms of what do we consider ag tech investment.
Okay, and Idris, from your perspective, what attracts you the most in ag tech?
I think the first thing is a change of name. We like to call it agribusiness, right? Because again, we think it's so broad, right? Again, food security is very important if there's anything we found out in COVID, right? And so when you expand that definition to agribusiness, it covers a large value chain. And there are some parts of that value chain where venture capital is very important and useful and can bring results. And there are some parts where you need other forms of capital. But when you think it's just agri-tech, you look at it from just a purely tech perspective. And so for us, when we then look at the opportunities for supply chain in that sector, for financial inclusion, for payments in there, for retail enablement in those sectors, for climate, right, you then start seeing things that could actually be rewarding as a venture investor.
And I'm curious if that's the play when it comes to ag tech, agri-tech, agribusiness. If the play is the spillover effect into other sectors, like you mentioned, retail enablement, FMCG, consumer businesses, is that the wider play?
I think it's the only play. There's no other way to go about it. I think we've seen a lot of e-commerce agri-tech platforms, for example, which we all had really high hopes for on the continent. But because of the lack of infrastructure from a logistics standpoint, from an aggregation standpoint, from a access to finance standpoint, it becomes kind of a moot point to try and say you're going to invest in one leg of the business. On the continent, we have the curse or the blessing, where we kind of have to, or we have opportunities across multiple areas within one kind of structure. So it's the only play. There's no other way to do it.
Okay. When it comes to the challenges, what are you paying attention to when you're making investments? What are some of the red flags that you're like, this is something I'm not getting involved in?
Yeah, so I think the first thing for us when we look at the agribusiness space is the domain experience of the players there, and then do they understand the dependencies, right, in the play, right? And so a lot of times our work actually starts before we invest. We actually do a lot of pre-investment work in the agri space, especially. For instance, over the past 2 years, we worked with USAID to run Project Sparrow in Nigeria and including Kenya, where we're even looking for investment readiness. How do we identify the keys from yield, from productivity to all the different parts, then figure out the entrepreneurs, help them understand the whole ecosystem and where they fit in, and then only the ones that we think are venture ready, they move on to our venture space. So for folks, some of folks, they will stay small, they will do good, but they are not venture backable, right? And that's good. And the problem is where you start thinking, I should put venture capital in almost every agribusiness. And that's a big thing, a big flag for us.
I think this is something that we need to highlight more and more in the venture capital ecosystem, is that not everything is venture backable. As an asset class, it was created for a very specific agenda, which is like high growth, high innovation, and now we're looking more at sustainability, profitability leg. So not everything needs to get venture capital money. And I think globally the number is less than 1% of startups do get venture capital money. And that's okay. So it's about also starting to think about how do we leverage government incentives, how do we leverage grants, how do we leverage other programs, because this is a really important part of the economy's the continent's sustainability in general.
What about the other side of the equation, private equity? Is agribusiness, ag tech a good proponent for that type of capital? So
if you look at businesses like Babangona in Nigeria, right, or Elo, Tractor, you've seen PE play a role, but it's been a long journey for them, right? Again, with PE and even with their control versus venture capital. And I think, yes, there's a play there, but again, the play also has to be mixed. Again, they have to figure out supply chain. So you can't just put money in a producer. You have to think of how do you ensure the consistency of purchase can you even predict what's being bought to influence what they're producing? Can you help control the inputs, the quality of the inputs they're getting, which affects the yield? Can you help them leverage technology to understand the weather effects on what they're producing? And then can you also bring in the fintechs to also play a role in stimulating the producers, in stimulating the buyers? So you have to, as a PE person, as a VC person, you have to be ready to do that whole value chain work for you to ensure that there's a result at the end of the day.
Another question, are there enough projects? It doesn't, I mean, I'm going to use the word attractiveness. It's not a very flashy sector. It's not like the fintech bros or e-commerce, agriculture. Yeah. Are there enough projects? Are there enough founders that are making the leap and building investment-ready ventures?
I think the answer to the question is yes, and I think over the last 2 to 3 years we're seeing a bit of a trend. So a lot of the venture capital that has gone into AgriTech has gone into maybe 5 startups from 2019 to 2023. However, what we are seeing is the increase in the number of deals on the continent of smaller ticket sizes, which is a very encouraging sign, meaning that we're currently building, especially with early stage players like ourselves, we're building pipeline for later stage investments. So if you see this kind of, even if it's a reduction in the volume or the value investments, but there's a volume increase, this is a very good sign for the later stage of ag. I think it's there. There's work, like Idris said, to help founders understand how to commercialize or how to think about their business as venture backable, how to prepare them for investor readiness. So similar to what he said, Flat 6 Labs looking at pre-accelerator programs where we help people in the business of agri digitize and then become investor ready and then expose them to investor networks. So this is kind of how we have to look at some sectors.
Is there a higher degree of hand-holding that is required for this sector?
I actually believe so. I think because if you look at the kind of young people who play in the venture space, agri is not very attractive to them, right? Compared to a lot of other things. You think of what the exit's like, you look at how flashy it is, right? So you almost have to encourage them to go in and handhold them. Sometimes what we've had to do is to bring in very smart tech-savvy folks, but also bring in domain experienced folks in the sector, in aquaculture, in production, right? And almost like marry them together in an accelerator, right? And help them, handhold them to actually turn those into businesses. And then you have to be very deliberate about those things to achieve success. Because the reality of it is this: fintech may be flashing all those things, but food security is paramount. If there's anything we learned in COVID, right? Yeah. If you're not food sufficient, and again, the African continent is going to double in population. Who's going to feed them? Exactly. So you can do all the coding you want, all the fintech. If you're hungry, you won't. You're not going anywhere.
And that is what the recent economic shocks that we've experienced have shown. From COVID to the Ukraine-Russia war, we have seen how vulnerable our nations are. So you almost want to think that the imperative to develop this as a sector, whether we look at it from a technology standpoint or from a pure agricultural standpoint, should be with our nation states, with governments. Is there sufficient help coming from governments?
I think one thing we see in tech is we thrive despite the government. So many times government is behind technology. So it's kind of catching up with where technology is. So for example, we saw this with crypto, where we had this whole boom on the continent and then governments catching up years later and just saying, hold on, no, stop. This is, we don't know what this means. Let's go back. So I think many governments have the incentive to work on food security. And so there's programs that they're running. But then there's also room for this collaboration where tech will allow this to expand much faster than how government thinks. So we really need to create more inroads between governments and the venture capital ecosystem, which I think this is happening more and more in a lot of ecosystems. So there's some positive traction, but a lot more could be done.
Idris?
Yes, same thing again. I think the reality is, even as the tech folks don't usually like government intruding, The reality, sometimes you can't entrepreneur your way out of every one of these issues. You still need government, right, to lower interest rates, to make access to finance easier for the farmers. Some of the infrastructural needs, right? Because we could create the best app for supply chain, right? But if the roads are bad, you can't move your goods. Right? Access to water, security, right? One of the biggest issues in Nigeria and farming right now is security. Are farmers secure on their lands, right? And I think it's all those that you have to do. And I come from a background where I grew up on a poultry farm. So my dad had a poultry farm throughout. And then I have a personal ranch now. So I have a ranch with cattle. And so I'm not techie who also has the agri side. So I see a lot of this and I see a huge role for government to play. But it's also important that we don't wait for government. That's the reality of Africa. You do it and they catch up.
We've heard from the investors. Let's hear from the founders that are shaping the agri-tech sector. I have with me Ayo Arikawe, co-founder of Thrive Agric, and Serubiri Uhuru, co-founder and CEO of Imaishape. Okay, so in starting off, Ayo, I just want to get your perspective on what it's been like starting an agri-tech solution on the continent. What have been the things that you were challenged with?
We started way back in 2017. And as a then, one of the challenges was just really convincing the farmers to use digital solutions. We had assumed that, we're going to create like a fancy smartphone app and then just deploy in the field. But like there are realities around farmers' ownership of smartphones, even things like network penetration, and their willingness to adapt to more modern practices. So just being able to navigate through those scenarios, how does this work on feature phones? How does this work offline? How can we rely on an agency model? And how do you train the farmers to actually adopt modern practices? So those are a few of the things that we saw getting into the space, because our work is like 100% focused on working with smallholder farmers.
And bringing you in, Uhuru, from your perspective, what did you struggle with in starting off?
Yeah, of course, there is the whole issue of the infrastructure not being in place to be able to deploy digital solutions at the last mile. So you find that you are reaching out to farmers, your solution is mobile-based, you are digital first, but then there is the whole issue of internet connectivity, which is still poor in remote areas where farmers are doing agriculture from. And then also the whole issue of access to phones. Sometimes it's not just smartphones, but even phones themselves. And then because agriculture in Africa is dominated by women, they are the ones who are doing the real cultivation. So that means it's the group that you are targeting. But you find that the phone penetration among women is still very low. And so you find that becomes a challenge when it comes to distribution of financial services. And so then also you find that you need to build an entire agency model. And so to be able to reach the last mile, to be able to mobilize on board the customers. And so the challenge was around the infrastructure. And then also the other issue is around, because we are providing financial services through digital means, there's the whole aspect of digital literacy and financial literacy. So you find that you need to sensitize the farmers, you need to sensitize them on financial literacy, on digital literacy, such that they can get to appreciate these new innovations that are coming, and then how they can improve their productivity, which reflects in improvement of their incomes. And so those were the issue, the infrastructure, digital literacy, financial literacy, and then also targeting a segment of women where phone penetration is still low.
Yeah, and I guess it's really not an easy feat, because it sounds like, in a way, you are building a market, building a product, and also building the road to get that product to your market. So it's like a three-way challenge that you're faced with. But the other aspect of that is scalability. And Ayo, that's where I'd like to get your perspective. How did you approach scalability when you're having to kind of build the ecosystem and the infrastructure around you as well?
Yeah, I think the first thing we did was really try to find product market fit, right? So which is like, think about things like at the onset, we didn't think about scale. Was really, how do we ensure the farmers love this the most and are willing to refer other people to the product? And eventually we're just able to create an SOP that was scalable. We started out with less than 20 farmers, and today we're working with close to 900,000, right? So I think it's just really at the very onset thinking about, how do I make this few set of farmers love the product so much that they will tell everyone else. And I think that's consistently helped us with scale, even similar with building a company, ensuring like the staffs, everyone that comes on board loves the product, can buy into the vision in a way that they can sell it naturally to anyone else. So I would say it's sort of like counterintuitive, but like the first thing is not to think about scale, but think about what are those first set of customers that can I make really, really love this product, then begin to build on top of that. And that's how we've done it so far.
Well, we're coming to you because another question that I have with regards to the agri-tech sector is that because of the amount of government support that was received, obviously you're feeding the nations and being able to provide for a critical need when it comes to the African market in particular. There's a lot of entrants. I mean, we hear of agribusinesses, agri-tech, ag-tech all the time. Is there a risk of having a lot of fragmented solutions to the market as opposed to more of a consolidated effort where we see collaborations and partnerships? How do you view this?
Yeah, I think ultimately collaboration is the key here. Yes, there are, of course, when we are talking about agriculture in Africa, we are talking about a sector that employs majority of our people in Africa. And so definitely, if we are talking, so that's why we call it the backbone of the African economy, not because it contributes the biggest chunk of the GDP, but because it employs the biggest chunk of the population. And so it gives majority of our people livelihood. And so because of that, then it has center stage when it comes to planning, when it comes to interventions. And so you find that it attracts attention because of its fundamental role in the transformation of the African economy and the population. And so you see that it attracts many players who would want to come in and intervene at different stages. And so the agricultural sector has many challenges. So we're talking about the challenges of market. We are talking about challenges of access to finance. We are talking about challenges of access to information. And so you find that there are many players who are coming in the different team to fix different problems. So for example, you may find Thrive Agric may be fixing the issue of market linkages. And then you find Imaisha is fixing the issue of access to finance. And you find there is another AgriTech that's fixing the issue of access to extension services. And so you find that when all these parties that are fixing putting all the different pieces together, collaborate, then at the end of the day, you find that we complete the chain. And so as Imaisha, we have tried as much as possible to build partnerships with the different stakeholders along the sector, those who are dealing with issues of market access, those who are dealing with issues of access to extension services, and even other payment processors that are looking at an opportunity within agriculture. And so we see that these collaborations, first of all, they de-risk the sector, they make distribution easier and cost-effective, and at the end of the day, you can be able to leverage on the capabilities of each other such that you can be able to distribute your product to the last mile.
Yeah, and Ayo, from a Thrive Agric perspective, how have you approached partnerships? How has this aided you in developing the product?
Yeah, I mean, I think we've always talked about like the ecosystem and what role everyone plays, right? So I'm super big on partnering with whether it's the input dealers, like the fertilizer producers and seeds, on the market access, who are the buyers that need these products from the farmers to feed into their factories. And even on the financing, what are the banks that are able to provide the credits? So I think with agriculture, it always needs to be an ecosystem play. No one player can plug in the entire gap because it's like super big, and just the challenges that need to be solved are massive and very time bound. So I think we've always thought about it from day one as how do we sort of like build that layer that's an infrastructure, and then everyone sort of plugs into then create value for the farmers. And I think that's how we've always thought about it day one. So it's one end, the input dealers, the financiers, and then the markets, who's going to buy the product eventually.
You mentioned it earlier, Ayo, when you were talking about the challenges and how access to technology and the fact that you're dealing with smallholder farmers can be potentially a challenge. And Uhuru also mentioned it as well. I'm curious about technology displacement, where as we progress within the agri-tech sector, that the fact that we're using new technologies like AI and blockchain actually is displacing traditional farmers and traditional methods of operating on the continent and excluding a whole demographic from the progress and the technology that it's bringing. What are your thoughts on this, Ayo?
I think like what we've seen on our end is it's actually more like enabling the farmers to be able to provide those services even better. As an example, in our case, farmers will typically not access things like machinery services, or will block that from credits, either because they don't have smartphones or they're not in those communities. So I think what we've done, and in partnership with the government, and I think like we've seen it happening in a couple other markets, is being able to say, how do we deliver this technology to the farmers using either an agency model or using an offline model to be able to increase their effectiveness and increase their productivity. But I think like for eventually what we're going to see is more and more, we're going to see a reduction in the number of smallholder farmers, but rather than them being excluded, it's now more of them becoming commercial farmers because now they have access to these sort of technologies, and then other people moving up the value chain. So either it's becoming like processors or becoming input providers. So I think in the context of like possibilities, I think it actually creates more value for farmers and creates more value in terms of what agriculture could contribute to the GDP, as opposed to excluding them. Again, that's my perspective about of the technology innovations so far.
Okay, and I guess this is something that we can dive into for much longer. But as we wrap up the conversation, I'd like to get your perspective, Uhuru, on what you're most excited about when it comes to the agri-tech sector.
First of all, the agriculture sector, I always say, is the heart of our civilization. Every single day, we eat food. And so we can go away with all phones, technologies and all that, AI and all that, but we can never go away with food. And so for me, that's why I'm very passionate about this sector, because I know it lies at the heart of our existence as humans. And so when you look at the market we are playing in, when you look at the smallholder farmers or agribusiness SMEs in general, they produce over 70% of the food consumed in Africa. But then when you look at the population of Africa and where it's heading to double within the next 30 years, and then when you look at the rate of urbanization with millions of people coming to urban centers, then that is putting extreme pressure on systems. And so the question comes, how can we empower these smallholder farmers and agribusinesses to be able to feed this growing population? And so for me, what makes me more excited is every time I see that we are contributing to the increase in productivity of these smallholder farmers, such that they can be able to produce more food to sustain the increasing population of Africa. And so whether we are enabling them to be able to save so they can purchase inputs, whether we are enabling them to access credit so they can invest in sustainable practices of agriculture, doing things like using fertilizers, whether we are enabling them to mechanize their operations through financing acquisition of climate smart equipment, or whether we are digitizing their payments such that they can build a financial history which can enable them to tap into broader financial services. So every time we see this happening and you see that, okay, here is a farmer, she has saved the $50 and she has been able to buy more seeds, she has increased productivity, and then we see that someone has been able to purchase her produce and she has been paid and that transaction has been recorded, and so there is a transaction history, then that kind of financial inclusion excites us. And because that financial inclusion fits into increase in productivity, which ultimately manifests into increase in food production, reducing the cost of food prices. And then that ensures that the growing population of Africa and then the millions of urban dwellers can have food all year round. And so for me, that's what excites me. It's a sector that we are very passionate about. And then its transformation, for me, I think lies at the core of the transformation of the African economy.
Wow, lots to be excited about. Thank you so much to the both of you for joining us today. It was a fantastic conversation, and we look forward to seeing the development of your startups. Thank you for joining us. And this is how we wrap up Startup Caps for this week. We'll do it again next week, this time looking into how Africa is building its startup ecosystem through early stage investing and corporate investing. Make sure to continue the conversation with us on social media. You'll find us on X, Instagram, Facebook, LinkedIn and TikTok with the handle _StartupCaps using the hashtag StartupCapsAfrica. And you can, of course, find out more about this week's episode by visiting our website, www.startupcaps.io. We'll see you all next week.